And I'll now get on with the next panel discussion. And this is going to be titled Bitcoin as a Strategic Corporate Asset. So I'm going to call up the names as I've got them written down here. So hopefully Michael Howe is right here. Thank you. Round of applause for Michael Howe. He's going to be asking the questions here. I'll have to practice my French, I believe. Alexandre Laizet, c'est ça, monsieur, ou pas? Yeah, okay, merci. Hubertus Hofkirchner. And this one's easy. My friend Scott Ellam, who's sitting in the front here.
We may need to switch around.
Oh, yeah.
All right. Thank you, Daniel. Thanks, everyone. Michael Howe, I'm Head of Strategy for Bitwise. At Bitwise, we are thrilled to be sponsoring today. Really great to be here with our friends BTC Prague. Thank you very much for attending. For those of you who don't know Bitwise, we are a crypto asset manager, about 15 billion in client assets over the US and Europe. We work with a lot of different cryptos, but I think it's fair to say Bitcoin is our favorite and our biggest. So with that, let's begin, I think, just by going down the line, doing some intros. Alexandre, begin with you.
Alexandre Laizet, Board Director of Bitcoin Strategy at Capital B. Capital B is Europe's first and largest Bitcoin treasury company. We have started back in November 2024, back in the day where there was only 3 Bitcoin treasury companies. And we have today more than 2,800 BTC on the balance sheet, and that puts us at the top of the listed companies in Europe having a Bitcoin treasury company strategy.
Yeah, Hubertus Hofkirchner. I'm, let's say, an Austrian economist, serial entrepreneur, and ex-banker in that sequence. And I guess the only thing you need to know from me is that I hate fiat. It has to end. And the way to do that is the project called Bitcredit Protocol, which essentially completes what Hayek wanted with denationalization of money. So no more central banks, but issue banks which issue their own currency based on Bitcoin.
Hi everybody, Scott Ellam. So as Sam mentioned earlier, we have an intended IPO in the UK under XCE, Connecting Excellence Group. Now, our flagship operating business that I established in 2014 is an international executive recruitment company. So we are, if you like, a fiat business historically, and we work sector agnostic. So we work with the likes of KPMG, Deloitte, Ernst & Young, but we also work across logistics, life sciences, engineering, and most of our revenue, 77%, probably as a result of the UK economy, is from the USA, it's from Europe, it's from the Middle East. So we're quite sector agnostic, quite regionally agnostic. Why am I on a Bitcoin panel? We've been using Bitcoin as our primary reserve asset since 2021. So we have an average purchase price of 37,500. We're approaching the IPO and we're going to be using if you like, an aggressive Bitcoin treasury strategy that directly, allows us to directly grow the operating business as a result through different means, which I'm happy to discuss. So that's the plan, and nice to meet you all.
Thanks, everyone. So as mentioned, the title of today's panel is Bitcoin as a Strategic Corporate Asset. Now, I don't think anyone in this room needs convincing that Bitcoin is sound money, but what I think would be interesting to discuss and to hear from our panelists about is how exactly Bitcoin is used in a corporate setting. What's easy versus what's difficult? What are the success stories you've seen? What are the horror stories? Why don't we begin, Alexandre, with you?
Sure. So Capital B, of course, has an intention to buy as much Bitcoin as possible, as fast as possible, and in the most accretive way as possible. Why? Because we are in a context today where all the financial institutions in the world are adopting Bitcoin, and the corporate sector is also adopting Bitcoin. And first and foremost, we are Bitcoin maximalists. We believe in the potential of Bitcoin, and that the best actual use case of Bitcoin is to buy it and hold it forever, and to not sell it, and to not lose it, and to issue credit on top of it. So as Yves Chefati from Tobam exposed just before, we are in this unique moment in the world where we discover an asset that has a fixed supply. The world discovers it. The United States government decides that this is the only asset the government does not want to sell. The only asset that the government does not want to sell. That's quite a statement. And you have all of the funds in the world that are starting to accumulate Bitcoin, but the fact of the matter is the assets in the world, that's about $1 quadrillion. Only 2% of the capital can acquire Bitcoin itself. Only 2%. 99% of global capital can only touch securities. Securities are equity from public companies or debt from public companies. And equity represents maybe 100 trillion. Debt represents about 300 trillion, and money represents 100 trillion. And so in that context, as a publicly listed company, you have the opportunity to issue equity to tap into that 100 trillion market. You have the opportunity to issue debt to tap into that 300 trillion market. And this opportunity is to build the biggest balance sheet in your region, in your continent, to have the opportunity to be at the formation, be the foundation of digital capital markets in foundation. And so the immediate thought that I know Matthias and a lot of Bitcoin maximalists would have is, this is centralizing Bitcoin. And my immediate thought is, no, this is decentralizing Bitcoin. Why? Because 3 years ago, you had only maybe 2 banks that were custodying Bitcoin. And with all of the demand of the corporate sector and Capital B being at the forefront of it in Europe, you have now tens of different banks that proposes Bitcoin custody. And now those banks are competing in self-custody products, in payments. They are proposing you to be able to withdraw Bitcoin from the bank, to deposit Bitcoin in the bank. And this is providing much more options overall for Bitcoin custody and Bitcoin payments all over the world. And this is also orange pilling, providing the Bitcoin education to hundreds and hundreds of people within those institutions. Since when we started back in November to now, I've probably done hundreds of hours of Bitcoin education in the banks, in the financial institutions, the brokers, and many of them, the Bitcoin treasury companies have become so important to their business that for some employees, it's even their full-time job. And so in that context, if it's your full-time job, you start to learn about the topic. And when you start to learn about the topic, you probably end up buying Bitcoin. And it's the same for Capital B shareholders. A lot of people who are in traditional finance, they discovered this stock that was able to completely outperform Bitcoin. They bought some, and then they learned more about Bitcoin. And overall, this is also contributing to Bitcoin education overall. And so the mission of Capital B is to lead the institutional adoption of Bitcoin over in Europe, and that way to contribute as well to the network in and of itself. And we believe that this is actually the best use case for Bitcoin at a corporate level.
Thank you, Alexandre. Any other perspectives from our panelists? Scott?
Yeah, I'm happy to take that because you can look at it from a different angle as well. Everything Alexandre is doing and everything that a lot of the Bitcoin treasury companies are doing We plan to replicate that because it is building a pristine balance sheet. Where our operating business is a business that deals with people, and our revenues are directly correlated to the quality of the talent that wants to join the business, I think there's more use cases for a Bitcoin balance sheet in both private businesses and public businesses that people will find as they go forward. So one for us, each consultant who works in the company is there as a revenue generator. So how do we attract the best talent in our industry? Well, as a private business, it's difficult to shout about your Bitcoin strategy. As a public business, you can then leverage the human capital to create more digital capital, if you like. So you can say, well, if you're on this kind of basic salary as an industry norm in our industry, you're on commissions and bonuses based on the revenue you generate for the company. Well, you can have the same at XCE or our flagship business, Spencer Riley, but what you can also have are share options directly related to the performance of you as an individual. So at the start of the year, here are the share options that you may be able to secure. That's the revenue number that you need to deliver in order to exercise your share options and buy them. So we're putting another angle on it from a traditional business using it on the balance sheet, and I think you'll see Bitcoin treasury companies grow exponentially over the next 5 to 10 years with balance sheets that have got thousands of Bitcoin on it, and we want to push to get to that. And I think as the adoption and that message goes throughout them banks and institutions you're speaking to, and as it goes out through the clients and the candidates that we speak to, and as more adoption increases throughout corporations, you'll see different use cases come in that just give that business the advantage in their specific industry. And I think it's important to sort of look at each industry, and it's tough to guess it unless you're a CEO in that industry and you're in there day to day and you're seeing the opportunities. So I think there's wider Bitcoin use cases, and I think companies that are out there educating and supporting integration and adoption, I think it's good to support, and yeah.
I love that. Bitcoin as a sort of innovative performance incentive mechanism in the business. Hubertus, use cases from your side?
Yeah, I mean, I think meanwhile it's 2025. Pretty much everybody knows the flywheel which Saylor has constructed. There are now, I don't know how many who do copy it. I think it's time to move on. Yeah? Bitcoin on the balance sheet is not only for the investment side, it must be for the operational side. Why? I mean, we can needle fiat by doing that, but we're still riding on the fiat system. The goal, the mission, is to end fiat. You can only do that if Bitcoin is adopted in real trade, in the real economy, importers, exporters, logistics. So how do we do that? We do that by reinventing a very time-proven financial payment instrument, which is the bill of exchange. Because trade, the real economy, the reason why the detractors talk against Bitcoin, we're not doing trade. Trade doesn't run on money, it runs on credit. And the bill of exchange is a peer-to-peer instrument established over hundreds of years as a solid legal basis all over the world, whereby a buyer can get credit from a seller for 30, 60, 90 days and not fall into a liquidity trap. Because if he issues a bill of exchange, pays with a bill of exchange, he can pass that bill of exchange on, get liquidity, pay his suppliers. Otherwise, trade grinds to a halt and Bitcoin cannot be adopted. Yeah, we watched very, very carefully in 2021 when El Salvador adopted Bitcoin. Everyone was waiting, things would be happening. On gold, one Bitcoin cost 38 gold coins at the time because of that expectation. Today it costs 25. Yeah, so we must be very aware. If we don't win that war for trade, Bitcoin cannot kill fiat, and that's the goal. Now, the good thing about trade finance, it's a very profitable business if you get into it. You're talking yields of about 10%, which are very high because of the fiat system. And the cost, the risk with it is traditionally very low. So opposed to those highly expensive 10%, you have a risk typically from below 0.5%. Why? Because the bill of exchange is a fantastic time-proven instrument. It has very fast maturity, 30, 60, 90 days, I said it. It has guarantee chains. It has a solid legal framework. It's self-liquidating because as soon as the goods which are being sold for bills of exchanges are sold, the money automatically flows back. So it's a fantastic decentralized free market means of credit. So there's a use case which Bitcoin really needs to win.
Thanks. When we're thinking about corporates actually going through the process of acquiring Bitcoin, are there any counterintuitive examples that you have seen? What do you think works well? What is not so effective? I'll leave it open to the panelists.
I would like to probably not contradict, but nuance a little bit the objective at least. I don't think the objective should be to kill something or to end something. I think the objective is to protect you from fiat or to take advantage of fiat and probably limit some potential negative effects of fiat.
Well, listen, if you do what we are doing, talk to the people who have to use the fiat system, have to use it in countries where whole countries are being cancelled because of some stupid things other people in the country do. When small and medium companies can't grow in the poorest countries, you really start to hate fiat. That system must end. Sorry.
So I would not disagree with the negative effects of fiat if you don't have a way to protect yourself. My point is that the right way to approach an issue is typically not to want to kill something or to end something, but probably to provide an alternative, which I assume you are doing, and we are all contributing here. So I think we are aligned on this. The only thing I would say is it is better to look at the system as it is and accept some of the facts. And one fact is that fiat equates to political power, and political power cannot disappear. That is a fact. It is always there, and so the right way to approach it is how to influence political power, how to limit its potential negative effects, and how to take advantage of it. And the solution is Bitcoin. And probably the solution is the solutions built on Bitcoin. Our focus is the store of value aspect. But, of course, other companies, the objective will be definitely to develop medium of exchange and be totally independent from fiat and don't depend on it. And over time, have fiat adopt Bitcoin so much that then it becomes the cornerstone, and in effect, the political power is more decentralized, and potentially you can eliminate some of the negative effects. And so when it comes to actually buying Bitcoin, I think one of the positive effects of corporate Bitcoin adoption with fiat, we use fiat because the best use case of fiat is to buy Bitcoin. So why don't you take advantage of it? And the best use case of the fiat system is credit. And why don't you use credit to accumulate Bitcoin? Why, that's exactly what we are doing here. And so the best way to acquire Bitcoin is actually to short fiat, to use the leverage and to use the fact that governments will be always printing more fiat, potentially less over time if Bitcoin adoption increases, but to use that fiat context and reality to take advantage of it and acquire more Bitcoin, and hopefully contribute as well, because the fun fact is the supply of Bitcoin from miners that is being sold in the market is about 450 Bitcoin a day. And the demand from corporates like us is double of this. And then when you add the institutions and the ETFs, it's again the double of it. And so what is happening in reality is that fiat is actively contributing to Bitcoin adoption through the credit that the institutions that never sell, like Capital B, like other Bitcoin treasury companies, and like sovereign wealth funds that are entering the system. And in that context, this buying pressure also provides the opportunity for people that are actually doing the hard work of building products on top of Bitcoin from a technological perspective to develop as a system and have that asset that appreciates over time.
You mentioned there it's not good to want to kill fiat. And I think the longer fiat lasts and limps on, the longer and greater the opportunity becomes for Bitcoin. You mentioned using within corporations there, and actually, I think the original question was about how to actually start the Bitcoin adoption within your business. So I was very fortunate that I'm controlling the business. So as a private business, it's my decision, and you have a conversation with the management accountants. And Sam, I think you were talking about the pension fund that allocated. Because I've made the decision, it's easy to put the pipes in place. Because I'm a Bitcoiner and I'm a Bitcoin maximalist, it's easy for me to make that call. But it was quite, there was a lot to learn from it, because we started buying Bitcoin at 41,000 British pounds, and it went up to 51,000 British pounds, and my management accountants, who still to this day don't own Bitcoin, were looking at me saying, it's just come down from 51 to 41 to 30 to 20, and you're buying it every day. And I think the more we normalize Bitcoin on the balance sheet, and the more we talk about it openly, whether it's private businesses and then encouraging public businesses to use it, the more people can see, okay, they've been there, they've done that, they've gone through the area that I'm terrified might happen to me, and this is how they reacted to it, and this is the result. And we all know that, typically speaking, a DCA strategy over a 4-year period provides a good result when you sat with the same management accountants 4 years later, and the same lawyers and the same everybody who said, this is a wild idea. But then, how do you spread that message? So part of my motivation this year to find my place in Bitcoin where we can have the conversation with clients and candidates, we have, I think our staff have 100,000 connections at senior levels across different marketplaces, across different industries, and across different jurisdictions around the world. We have 1,000 conversations a week. Now, we're intending to IPO in the next few weeks. Each one of them candidates and clients in each one of them sectors, whether it's professional services, business advisory, whether it's life sciences, whether it's logistics, each one of them is going to see that we have a public Bitcoin strategy. And that just allows the conversation to start happening and to start normalizing Bitcoin within corporations. Granted, we are an international headhunting firm, so of course we are now working on Bitcoin senior level executive placements. And one of the offerings there is we work confidentially with candidates. So there's a lot of people, and this is going back to the Chief Bitcoin Officer conversation Sam was having. There's a lot of people in roles who are Bitcoin maximalists who are terrified of having that conversation in the organization that they're in at the moment. And we want to build that bridge where they can confidentially have a conversation with one of our consultants and say, hey, I'm a chief investment officer, but I'm a Bitcoiner, and I'm in this position. Here's what I'm interested in. When the right role comes around for me, please give me a call. And if that's going to start with Bitcoin native businesses, Bitcoin treasury businesses, it's going to start with businesses who are interested in Bitcoin. And we've been working with clients on vice president of client relationship roles, chief investment officer roles, and it looks like we're going to start working on one in the US soon. But as we move forward, I think what you will see there, and this is where I go back to the risk for businesses to not consider Bitcoin and not start thinking about a Bitcoin strategy now, who are in the traditional space, is people will move from a traditional business into a Bitcoin business if they're a Bitcoiner without thinking about the salary and the incentives. They will do it because of the mission. So by ignoring Bitcoin in a traditional business, you risk losing some of your best staff who haven't yet, for want of a better phrase, publicly stated within that business that they are a Bitcoiner. So there becomes a risk on both sides of the equation. If you're not looking to hire a chief Bitcoin officer or think about Bitcoin strategy, that's one risk. If you're not openly having a conversation in your boardroom about Bitcoin, you might lose your best talent to the Bitcoin space.
Does anyone have Bitcoin-friendly management accountants? Which I think Scott's looking for some new management accountants.
I've found some new ones.
Hubertus, anything to add?
Oh yeah. And probably Georg, our chief legal officer and trade finance head, gonna berate me for that afterwards. But I do have to say something first on the principle. I think it's very important, as Alexandre said, to protect yourself personally once you understand what's going on in the fiat system, yeah? And that's perfectly fine and necessary. In addition, I think those who are a little bit more, let's say, on the political side of things, we must be aware just how bad fiat at the same thing is. Yeah, we have this inflation thing, we have asset price bubbles, we have house price bubbles, kids can't buy their houses, you have systematic trade imbalances which increase geopolitical conflict wars, trade wars which go wild. So it is as important it is to have the individual protection for yourself as a sovereign individual. It is a valid goal to end this time of fiat, which has now lasted for something like 110 years, which is exactly 110 years too long. That said, how do we get to the Bitcoin? When you have Bitcoin as an operating model to fund trade in industry, there's essentially two main ways how you acquire Bitcoin. The first of all, Hal Finney, when he wrote this article, which Eve presented already this morning about the banks, he still called it, which issue their own currency denominated in Bitcoin, that's the first way. So what Bitcredit Protocol developed in open source, peer-to-peer software, of course, free, is a software which allows to build Hal Finney's banks, which we now call Mint, because they're not banks. They're only subject to Bill of Exchange law. No banking law touched, no central banking law, no banking law. It's just plain pure Bill of Exchange. So you can operate one of those, which means you need you can found a joint venture. For instance, with we are founding one in one country which I can't name, where there's a production company, a supermarket chain, and let's say a bank which is very friendly to this new non-bank industry, pretty much like the mobile phone companies had to break away from the statist telecom companies in the 1980s. You can see my gray hair, I was there. So that's the first possibility. Found your own mint according to the scheme of Hal Finney. It's very strange that we're in 2025 and still hasn't happened, but now we're there. Second thing you can do is to be more like a fund investor from the financial side, and I assume many of you are from the financial side. So you have many possibilities there. A, you can contribute equity to such a venture because such a bank will need guarantee capital in case a bill of exchange fails and before it can be recovered. It's a tough law, the bill of exchange law. You can recover outstanding debt very, very fast, but it will still need guarantee capital, similar to bank capital. Let's talk 10% of your volume. Second of all, you can do is you can have a senior debt because all you're providing with your Bitcoin is liquidity. So you're actually not having it at risk. When you discount or when you, as you say in the future, mint a bill of exchange, you keep your Bitcoin in self-custody. That's very important for Bitcoiners. Yeah, it only changes hand from one mint to the next when a bill of exchange is due, from one self-sovereign wallet to another self-sovereign wallet. No money creation. It's only credit enhancement. So that's the super senior tranche, which provides the Bitcoin, which is the bar reserve, the reserve, on top of the bills of exchange. So it's a full reserve system, and don't call it banking, it's full reserve minting, backed by 100% bill of exchange, 100% Bitcoin, and over collateralization by a credit layer on top. And what's even more better, I know that many Bitcoin treasury companies we've been talking have told us they're very sensitive to risk. Yeah? There's even a further possibility, because you can actually do credit insurance on bill of exchange, which further lowers the risk. So in banking, this is known as the highest quality asset, sovereign class, essentially. So those are four completely new ways how to get to Bitcoin. And the demand, by the way, is huge. So world trade, just on the international frame, is 33 trillion. Yeah? Bitcoin as of today is only 2.1 trillion. And we know from the later time of Britain, for instance, when this ended, you need about 25% of, let's say, hard monetary base to run the full system. So you can do the maths.
Just keeping an eye on the time, should we change gears slightly and talk about yield? Sources of yield, risks associated with it, how should it be managed? Alexandre?
Yes, so I think something that you've mentioned that is very important is to be on a Bitcoin standard. If you measure your yield, your performance, your increase in salary, your increase of revenues in fiat, then you are using the wrong tool to measure things, because fiat, as you mentioned, is completely losing value over time. In fact, it is the actual current policy and mandate of central banks to continuously devalue the currency. And so in that context, if you don't use as a tool to measure things in life in Bitcoin, if you don't use that tool, then you are probably going to make bad economic decisions. And so in a Bitcoin treasury company at Capital B, we get contacted every day, every week, on how to use our Bitcoin. And we are being proposed various types of yields, and we always say no. Why? Because, as Yves said, the best way to use Bitcoin is actually to have the most boring asset side of your balance sheet, and not use that Bitcoin for something else that would undermine your ability to use the liability side of your balance sheet. And so for a Bitcoin treasury company, the best use of Bitcoin is actually in the way that will maximize the capacity of the company to issue different forms of equity and of credit in the market. And in that way, if a company is using or taking an additional risk with the Bitcoin, which is a potential possibility for a Bitcoin treasury company, of course, as an operational company. But if there is a use where Bitcoin is more at risk, then in that case, it limits the capacity of the company to go at full scale and at full speed on the issuance of Bitcoin-backed credit, which Michael Saylor calls digital credit. And so when you look at what is happening today in the market, you've had Strategy that has issued the first form of Bitcoin-backed equity, Bitcoin-backed equity and Bitcoin-backed credit. Of course, with the stock itself, which is Bitcoin-backed to some extent, and with digital credit, first with the convertible bonds, and then with preferred stocks. And actually, Capital B has been the second digital credit issuer in the world with the Bitcoin denominated convertible bonds. And those Bitcoin denominated convertible bonds allow the company to take in Bitcoin and to have the possibility, if the stock outperforms, to have a conversion into the stock, and in that way increase the number of Bitcoin per share. And so the metric for Capital B in terms of yield is measured in Bitcoin itself. It is how much Bitcoin per share can you add over time and build a form of Bitcoin accumulation machine for your shareholders, because one shareholder can start with 1 Bitcoin per share and in 3 to 5 years end up with 2 or 3 Bitcoin per share. And so that opportunity is the biggest opportunity, because where in the world can you have an opportunity to have 1,000% of yield outside of a Bitcoin treasury company that increases the Bitcoin per share by plus 1,000%, which is what Capital B has been doing this year.
Fundamentally, the reason people invest in businesses like Capital B and the, I suppose, business case for Bitcoin treasury companies and pure play Bitcoin treasury companies is that mandate to increase your exposure to Bitcoin. So people will pay a premium for that on the belief that the business can, and then when the business does, the premium is justified again and again and again in a compounding effect. And outside of just yield for pure play Bitcoin treasury companies, you have private businesses who are measuring their business in Bitcoin as well. I know I just couldn't help but intuitively measure the value of our balance sheet based on the Bitcoin we held and kind of ignored anything that was fiat on the balance sheet, because I think, as you've said, an unquestionable asset, you don't know what the fiat is going to be worth in 3, 5, 6, 7 years' time. So how do you do that when you're doing both? When one side of your business is a Bitcoin treasury company with an aggressive Bitcoin strategy, and the other side is a fiat mining operation operating with traditional businesses? Well, there are tools that will allow documents on your PC to immediately translate numbers into Bitcoin valuations, but the management accountants you mentioned the other day weren't impressed when I sent through our whole P&L in Bitcoin once over the last few years. But from a yield perspective, the human capital yield of leveraging our Bitcoin strategy to attract the best talent is good, but building a team that can develop the business and develop the strategy for the future is very important. And I'm just going to shamelessly name drop here that having the conversations with, we have Richard Byworth involved with the business, and we have Adam back as a key strategic investor as well. And the convertible bonds that have been pioneered by the likes of Capital B and H100, we're having conversations about building Bitcoin denominated ones. I think really do help businesses drive in those early days in terms of delivering serious yield for investors. But people are the most important driver behind businesses, and outside of just the yield aspect, building a team with the likes of Sam and Cartwrights, I think there are people here from Cartwrights today, you just want to make sure that the connections and the network you're building as a business is aligned with the Bitcoin-only ethos, and the yield will be developed over time from the point of view of you compounding the knowledge base as well as the Bitcoin on the balance sheet.
I'm quite sure many of you have been asked when you went for this venture to maybe found a Bitcoin treasury company or fund it. This question by analysts, and I know they will ask that because I would have asked it if I didn't know what I knew, which is, are you guys all mad? Yeah, you're buying marketable securities, you're buying a digital commodity which has a market price, and there's this MNAV which is way above 1 or obviously less than. And so to say what we need to know is if we want Bitcoin to rise to its natural value, and it has a natural value, but it's important to know. Gold had a natural value for centuries, for millennia. Yeah, if you buy a good business suit today, it will cost you, let's say, a quarter of a gold coin. You can get a pretty good business suit for that. And a quarter of a gold coin used to be called aureus during Roman times, and it bought you a nice business toga, obviously. So Bitcoin has a fundamental value. Be aware of that. Now, why am I saying that? If you have a marketable security, the financial theory is correct. Ultimately, it has to be at the value, at market value. But what we need to take into consideration is one thing. The mere existence of Bitcoin treasury companies changed the fabric of Bitcoin. Because the existence of Bitcoin treasury companies gives the chance that half-finished banks arise. Eve mentioned the Bank of England at the time. So this is trade. 33 trillion in trade, even more in world trade, is what will be needed to settle the trade. So that's the way to bring the demand for Bitcoin to where it should be. And the interesting thing you need to know is once you use Bitcoin in trade, not only does it rise to this fundamental value which it had, like for gold it was $20, $19, $13 for centuries. Now it's volatile because it demonetized. But whatever this value of Bitcoin is, it will rise there and stabilize there because goods are being bought against credit and credit is being extinguished, and this media of exchange is derived from the bill of exchange. So all of a sudden you get stability which will beat any stable coin Because a stable coin is just fiat, like a pig with lipsticks. It's still fiat.
Thanks. Just keeping an eye on the time. To our panelists, is there any final thoughts maybe about the opportunities presented by Bitcoin as a strategic asset? And then maybe after a quick round there, we can open the floor to the audience to do some Q&A.
I think what's important to remind is that the financialization of Bitcoin is just starting. And you can either see that as bad or good, or you can completely forget about that choice and have the choice of not choosing if it's good or bad, but actually what are you doing about it to take advantage of it. That's a quote from Yves, always. It's when you look at a situation and there is a potential opportunity, then you may ask yourself the question, what are you going to do about it, instead of making an ethical statement of some kind, which Europe is used to do compared with the US, where the American people typically look at where is the opportunity and how to take advantage of it. And so the Bitcoin treasury company positions as the way, and depending of course on how it is structured, potentially the best risk-adjusted way to go deep into that opportunity and maximize the potential returns, of course as well volatility, but potential return that that scenario, which is monetary debasement and the expansion of global credit, to take advantage of it and be on that wave when it happens. And something that has not happened yet, because today we have seen in Bitcoin treasury companies a lot of OG Bitcoiners entering the scene and transferring Bitcoin that they had into Bitcoin treasury companies. We've seen a lot of Bitcoin native institutions start to allocate, and we've seen some as well sovereign players and more traditional finance institutions start to allocate as well. But what is in its infancy is the emergence of digital credit, Bitcoin-backed credit. It's just starting, and the size of Bitcoin-backed credit is likely going to be 10 order of magnitude bigger than Bitcoin itself, and Bitcoin itself is likely going to be as well 10 orders of magnitude as it is today. And so there is a massive opportunity, and the question is how to position in that digital gold rush.
Okay. I guess my message is don't be overly cautious. I think we all know, many of us probably would have wished they were early on Bitcoin. Yeah. The later Bitcoin treasury companies probably would have hoped they were as early as Michael Saylor. And I think it's going to be the same with how thin is mint. So pretty much like in telecom, the first mints which developed the business model, which store the, let's say, guarantee capital equity tranche of it, will see a much, much higher return than those who come later. So if we're starting off now, you know, in this lost part of the world, Guatemala, cacao, some funny woodworks in Africa, some cotton in Egypt, it's all very little. But it has already the seed of something really big when Bitcoin runs world trade. So don't be shy.
We want to see Bitcoin business, corporate, if you like, adoption increase. So I think my message is just help normalize that conversation outside of just our, if you like, echo chamber of businesses that really understand and get Bitcoin. Because outside of here, there's a 98% of businesses who are completely unaware, who aren't having the conversation. And the more you can bring on board, it's the exact same as it is with the retail and your friends and family's adoption. Having that conversation in the boardrooms with clients, with candidates, and just meeting them where they are. So I think a lot of people you speak to in business when you talk about Bitcoin expect that you're going to suggest that they put their entire balance sheet into Bitcoin a week later. And I think you've got to understand and you've got to communicate to them that what you would possibly suggest is that their education plus conviction equals allocation. So if you're at the start of that journey, fight to just clear the confusion for them about unit bias and about starting small with an allocation and a DCA as a strategic reserve asset that makes up 1 to 5% of their portfolio, and just have that conversation. And I suppose as a business like ourselves, if any of them say, yeah, we would like to speak to people about this, then do get in contact with a company called XE, Connecting Excellence Group, who's looking to place chief Bitcoin officers with clients looking for Bitcoin expertise. Don't be shy.
Thank you. Q&A.
My name is Jacob. The title of this panel is Bitcoin as a strategic corporate asset. And some of you are accumulating Bitcoin. When you have Bitcoin on your balance sheet, you can do things with it. You sit on a hard asset, a liquid asset. So you can start to deliver products and services on top of that. Is this something that you plan to do or think that others will do? I'd like to hear some predictions on what businesses that sit on Bitcoin will do.
As I mentioned before, we are solicited every day to put Bitcoin at risk and get a potential return, and that is not our strategy. But however, we do believe that a whole financial system is going to emerge around Bitcoin, and that Bitcoin and or its layers are going to be used a lot, and that the companies that have the biggest balance sheet could be in a position to benefit the most from that evolution. And so at Capital B, we have a team of developers that already run our own nodes in Bitcoin, in Lightning, and in Liquid. And what we are preparing for is the tokenization on capital markets with Bitcoin as a base layer, and with Bitcoin-related technology as the capacity to do things around Bitcoin in the financial system, but based on the Bitcoin layer, which is not sand, but is actually very robust. And so, as of today, you see that there is a lot of excitement around doing tokenization on top of sand with potential other protocols that are not that secure, not that decentralized. And ultimately, either there is an issue with those protocols, or the most likely scenario, the banks would just copy the code and do their own things, which they are already doing. So I don't take a lot of risk by saying this. So what we do see is, however, that over time, the network that will win is the most decentralized and secure. The answer is Bitcoin. And so it's better to already build technology on top of it to have the capacity to be in the best position when digital capital markets grow the most, which we contribute on the asset side, on the liability side, and we have operational teams. And so why not contribute to the formation of tokenized capital markets on Bitcoin? And we have an ongoing project that's been announced a few months ago of tokenizing on Bitcoin the shares of Capital B, so that there is a market, decentralized market, potentially self-custody market, in terms of the exchange of a tokenized share on top of a Bitcoin layer. The Liquid is a sidechain of Bitcoin that's been developed a lot by Blockstream, with a federation of tens and tens of members that allows for the native trade of the share between Bitcoin and the shares themselves, because it's not because you are a Bitcoiner that securities are uninteresting, but there are a lot of Bitcoiners that don't want to go out of Bitcoin because potentially they hate fiat or they don't want to get back to it. And so then you have the capacity to have financial instruments that are BTC native and that contribute as well to the growth of the Bitcoin ecosystem as a whole.
So you asked why Bitcoin on the balance sheet is strategic, right? So take into consideration, and I'm talking about world trade. It's extremely strategic to have enough Bitcoin for the real economy. Because if you look at what's happening in world trade, the big commodity companies, think Trafigura, the Geneva traders, Glencore, they don't do transactions in small numbers. Yeah, you're talking tens, if not even $100 million transactions. So a little hodler with, say, 10 Bitcoin, I mean, he may feel nice about it, but he can't move world trade. So which means that any company which right now accumulates Bitcoin will have an advantage in competing against us for this business based on its equity layer, but also based on the amount of Bitcoin it holds. So the message is, if you can Bitcoin now at the current prices, buy it.
You're on about use cases, but I think the best use case for Bitcoin at the moment is buy and hold. The way the space will develop, I agree with a lot of what Alexandre said then, and it allows opportunities for 24/7 markets to operate in different industries, share dealing, securities dealing, but private businesses as well, and banks. The obvious use case of Bitcoin is sometimes a one that people just miss, and the industry's not grown as fast as I thought it would. But it's pristine collateral. And what do you need pristine collateral for? Well, I'm not suggesting that the bank's balance sheets are not as strong as they would necessarily make out that they are. But I think most of the banks around the world, especially the UK, the balance sheets are based on commercial property values, etc., which it's just not a pristine collateral. In fact, they need a significantly long report to value a piece of property, whereas Bitcoin, you can value it 24/7, 365 days of the year, and know exactly what it's worth. So I think pristine collateral is the obvious area that will develop soon.
We've got another question here.
Okay, so that was actually a really good segue. So, I really think this presentation brought out a good conflict with these objectives. You know, the store of value objective and the medium of exchange objective. And I really they're both really important. And I would say neither wins without the other. But I would ask if you guys maybe could see a world where it's actually just like a division of labor. It's not they're not competing objectives necessarily. We just have people who are really good at creating Bitcoin treasury companies, and maybe we have people who are just really good at moving commerce the way the founders envisioned us to.
It's actually quite easy. It's a question of stages. Yeah. In the initial stage, and this is why Bitcoin treasuries are currently so important, Bitcoin is, let's be honest, speculative. Yeah, we are open about it. We're looking into the future, what's going to happen. Once trade has in, Bitcoin will lose its volatility. The more trade is on it, the less volatility it becomes. And ultimately, it will be much more stable than today's fiat currencies. We all know what floating exchange rates do to businesses. Yeah, exchange rate of input rises, exchange rate of output falls. Business which had 100 years of history can be dead. That's fiat. Once Bitcoin stabilizes, like gold was stable over millennia, there is no use in using it just for a financial flywheel. You will use it for trade. So, simple answer: it's stages. Right now, we're at stage A. In stage B, it will be different.
On the stages there, store of value, yes, comes first. I see our business as uncorrelated to Bitcoin on one side. So when Bitcoin had an 80% drawdown, the business revenues, I think, doubled that year. So it's uncorrelated to Bitcoin in some aspects and synergistic from a network effects and a people point of view in others. As a medium of exchange, we would gladly accept Bitcoin from clients. We're hoping to normalize that conversation, but sometimes, especially the last couple of years, we've been waiting for payments from US clients. new client, and we receive a check in the office in the UK, and my exec assistant says to me, Scott, you need to go to the bank with the check and cash the check. And I'm watching somebody in front of me being interrogated about $1,000 they've brought back from a holiday in the USA, thinking I'm sat here with a check for over $100,000 in the bank about to ask, can I cash it? And then have to explain that when they ask what services we provide, it's selling people, effectively. But the exchange rates at the moment mean that we are seeing wild swings in the invoice value that goes out to an international client and the amount that we receive. So provided the client was willing to pay within a 5 to 10 day period or something along those lines, you could quite easily use it as a unit of account for trade right now based on the last 3-4 months of price action. I mean, obviously, the law of SOD would confirm that as soon as you used it for a unit of account with a client, the price would vary wildly. But we'd feel quite comfortable doing that and using it as a unit of account when placing invoices.
We've got one last question here.
Hi, 2 quick questions, more financial market related, I would say. The first one would be, what's your view on all those Bitcoin treasuries companies that have been listing over the summer? I feel like on one hand it's very good because it's pushing for Bitcoin adoption within the corporate world, but at the same time, a lot of penny stocks and dying businesses have labeled themselves as Bitcoin treasuries, and I feel like that this has hurt the whole ecosystem during the summer. That's the first question. And the second one, we are talking about decentralization as well with Bitcoin treasuries acquiring Bitcoin. Do you think that M&A and consolidation could be coming over the next few years? Because we've got company trading at 0.9 MNAV, for example, and Capital B is trading at 1.5 MNAV. So it would make sense for a company like Capital B to acquire a smarter web company, for example, and then it would be equivalent to buying Bitcoin at a discount, and then the next day you would be reevaluating those Bitcoin at 1.5 or 1.7 MNAV and creating shareholder value. So what's your view on consolidation within the ecosystem and M&A as well? Thanks.
So I will answer both questions at once. I would say that you will not be surprised, but Bitcoin is money, everything else is credit. And in that respect, the money component, I would like to separate the medium of exchange piece, because you can say the censorship resistant transferability is definitely Bitcoin layer 1, and the medium of exchange on the currency, day-to-day currency side is potentially in the future as well, and for some people already in the right cities like Lugano and some others. Already Bitcoin is also winning, but on layer 2, 3, 4. And so in that respect, Bitcoin is building as the best store of value, the best money as a whole. And it is because it is the unquestionable asset, as we've seen. And in that context, you've mentioned that there are a lot of Bitcoin treasury companies that are coming because a lot of people realize that there is a massive opportunity in Bitcoin capital markets. But if you put your laser eyes on and you analyze the industry, I personally only see 3 to 5 companies that are really taking this seriously and that are focused on maximizing the number of Bitcoin per share, but really by accumulating Bitcoin for the long run, building the best balance sheet in your region, and getting to that size where you can reach a form of regional dominance on the issuance of digital equity and digital credit. That comes with being the best at issuing the most accretive equity, being the best at issuing the most innovative credit instruments, but that are aligned also with the overall long-term mission of the accumulation of Bitcoin, because this is as well what enables for the best type of credit issuance over time for different type of investors. And so that includes the instruments I mentioned. It also includes potential consolidation in the future. But it is not necessarily a business model. It is that sometimes there are specific opportunities for consolidation, because size will definitely matter in a market where there are a lot of issuers, but not a lot of quality. And so over the last 4 to 5 months, what we've seen is a natural selection in the market. And Capital B, to date, has been one of the only companies, if not the only company with strategy among the big Bitcoin treasury companies, to consistently maintain a premium in the market. And that is mostly due to the formation of the investor base from an organic perspective for 1 year with long-term strategic Bitcoin maximalist investors that are here for the long run, here for the exact strategy of applying the strategy playbook at European scale. And that is completely different from opportunistic market players that have seen an opportunity, done a pipe, and investors that are not here for the long run. And so that is completely different. And however, there is more competition coming, that is for sure. And so Capital B takes this very seriously and will maintain a clear focus on the issuance of the most innovative digital credit over in Europe.
You might agree with me on this. I'm assuming you are a Bitcoin treasury company investor. But same as Alexandre said, I see a very small amount of true Bitcoin treasury companies. And in our jurisdiction in the UK, I see 2. One, Freddie, CEO of there with B Hodl, where you look at the board, and the board is full of Bitcoiners who've got a history and proof of work within Bitcoin, running Bitcoin-only businesses in, let's say, the closest thing to the UK you can be and still be under a good tax regime. And then you mentioned Smarter Web as well, where you've got UTXO coming in with them at the start, where the regulatory sort of woods wasn't particularly clear. So they might have used the term digital assets in their pre-IPO and at their IPO. But you knew based on the people who were in there that that was a Bitcoin treasury company and that was what they were going to be focused on. Outside of that, there are quite a number of companies in the UK who've already been public for a number of years, possibly been involved in crypto, and possibly been involved in mining rare earth minerals, who you saw after that event suddenly have a Bitcoin treasury policy and an announcement. But if you ask the board, have any of them ever made an on-chain transaction, I think we all know what the answer to that question would be. So there's a huge differentiator, and it's probably easy for people in this room to spot them instinctively, but it's not so easy for a retail investor who's not a Bitcoin maximalist to spot that. And I think that's why education is so important in the space. And just on your acquisition and consolidation point, just an interesting angle that just going forward, the businesses, we want to disrupt executive recruitment with a Bitcoin treasury strategy. And I'll give you an example of Bitcoin per share accretive acquisitions that wouldn't be with a treasury company. So there's a significant amount of private businesses in our industry owned by 1 or 2 individuals. And there's a difficulty in accessing exit liquidity for them. They might have their name above the door, and they may have a team of 20 people generating revenue. And let's say they've got £1 million in the bank, they turn over £5 million, and they make £1 million a year. If we can say to them, okay, if you want to stay within that business for 5 to 7 years, let's immediately switch the $1 million in the bank into Bitcoin. We'll give you some share options staged over 3, 5, 7 years, but provided you continue growing the profit of the business in relation to not just, you could be quite innovative in saying not just when measured in fiat, but also measured in Bitcoin, although that might be a bit of a challenge for them. But they can earn them share options over a long period of time, but increase the Bitcoin per share. And you could probably run a strategy where you grow your operating business and consolidate a fragmented industry by doing that and immediately changing the fiat into Bitcoin.
Maybe slightly controversial. You may not like that. But if we run, so to say, just a corner on Bitcoin and raise the price, what are mining companies doing? They will be keeping mining Bitcoin. They will have cost. They will have energy cost, ASICs cost, operating cost. So as we drive, let's say we do a silver corner like the Hunt brothers, as we drive the Bitcoin higher with Saylor's flywheel, which by now everybody knows, everybody can copy it. It's no skill in it. The expense, the purchases which have to be done for Bitcoin are rising. So the question of this merger right now, I would absolutely say no, don't do it. Whereas, once Bitcoin becomes medium of exchange, and I'm aware that this audience may be more on the financial side and less interested in getting, but that's what's going to give Bitcoin value. And once you have value in a treasury company because of an operational business like Jonas or Joseph asked, it becomes different because correspondent banking depends on local networks, relationships to companies, with commercial entities, with reflux of bills of exchange and medium of exchange, which used to pay it. So then it makes absolutely sense to consolidate the industry, just like Vodafone, for instance, bought a worldwide network of telecom companies. So it's a question of timing. That's my answer.
We are at time, unfortunately. So from me and from Bitwise, a huge thank you. Thank you to the audience for your attention and for your questions. And a big thank you to our panelists as well. Thank you.